What do we do now?
We're doomed.
Imagine something so deeply woven into your everyday life that you almost never question it. The paper in your wallet, the digits on your bank account, the prices on every product you buy, all of it depends on one assumption, that the US dollar holds value. We live, spend, earn, and save based on a shared belief that this green piece of paper represents something real. But what if that belief hides a more unsettling truth? That the world's money system, the very foundation of global trade and wealth, was not built on gold or productivity, but on debt. The US dollar is more than a national currency. It is the bloodstream of the global economy, the medium through which nations trade, corporations borrow, and central banks build reserves. Yet its power is not backed by a vault of gold. It is backed by promises, credit, and confidence, a web of trust that can stretch but not break. This story, The Secret Life of the US Dollar, is not just a history lesson. It is the story of how faith in paper became the engine of the modern world, and how fragile that faith might be. To uncover the story, we have to go back to the origins of money itself, to a time when money was not an abstract number, but a physical thing: metal, gold, silver. Early Americans trusted coins because they contained something tangible. When Congress created the US dollar in 1792, it was defined by the weight of silver it contained. Money had substance. It could not be printed endlessly. And because it was limited, it was stable, or so it seemed. But as the young republic grew, fought wars, and built infrastructure, it needed flexibility. Gold and silver couldn't keep up with ambition. So began the slow transformation, from metal to promise. The US government began issuing paper notes, first during the Civil War, when it printed greenbacks not fully backed by gold. This marked a turning point, the moment when money became less about what it was and more about what it represented, a promise of future value. This shift revealed a fundamental tension that would shape the next 2 centuries. Money as something real versus money as something believed. A gold-backed dollar kept inflation in check, but tied the economy to a scarce resource. A debt-backed dollar offered freedom to grow, but at the cost of trust. That trust would be tested over and over again as America's power and debt expanded side by side.
By the early 20th century, the United States had matured into an industrial powerhouse. In 1913, the Federal Reserve was created to stabilize the banking system and manage money supply. Its birth marked another step away from hard money and toward managed credit. But the real transformation came after the Second World War. The world lay in ruins. The United States, by contrast, held most of the planet's gold. Out of this imbalance came a new order. In 1944, global leaders gathered in Bretton Woods, New Hampshire, to design a financial system that could prevent another Great Depression. The result was simple and revolutionary. Every major currency would be tied to the US dollar, and the dollar itself would be convertible to gold at a fixed rate, $35 an ounce. In that moment, the dollar became not just America's money, but the world's money. This new structure gave the United States what economists later called an exorbitant privilege. Because the world needed dollars for trade, America could borrow and spend more freely than any other nation. The dollar became the world's reserve currency. Central banks across Europe, Asia, and beyond held US dollars as reserves. Oil and commodities were priced in dollars. Debt was issued in dollars. The greenback was now the backbone of global finance. Yet this supremacy carried an invisible cost. To supply the world with enough dollars, the US had to run deficits, sending more money abroad than it brought in. Over time, there were far more dollars circulating globally than there was gold to back them. This imbalance planted a quiet seed of instability. The dollar's strength was built on promises that eventually could not all be kept. By the late 1960s, those cracks began to widen. The United States was spending heavily on the Vietnam War and on social programs at home. Inflation began to rise. Foreign governments, holding vast sums of dollars, started asking to exchange them for gold, as the Bretton Woods system allowed. But when they did, the numbers didn't add up. The US simply didn't have enough gold left to redeem every dollar in circulation.
In August 1971, President Richard Nixon made a decision that would change the course of financial history. In a televised address, he announced that the United States would suspend the convertibility of the dollar into gold. Overnight, the dollar became a fiat currency, backed not by metal, but by the full faith and credit of the US government. The gold window was closed, and the world entered a new era, one where money could be created, expanded, and leveraged far beyond the limits of any physical resource. At first, this seemed liberating. Governments could now manage economies through interest rates, spending, and credit without worrying about gold reserves. But liberation came with temptation. Without gold as an anchor, debt began to grow, quietly at first, then exponentially. The dollar system that replaced gold was built on borrowing. Governments issuing bonds, banks creating credit, and investors treating debt as wealth. This new financial world was incredibly powerful, but also incredibly fragile. Each dollar in circulation was someone else's liability, a promise to repay. The more the world used dollars, the more it depended on American debt. US Treasury bonds became the safe asset of global finance, the benchmark for everything else. Yet every expansion of debt brought the system closer to its limits. In the decades that followed, the United States experienced cycles of boom and bust, the inflation crises of the 1970s, the debt bubbles of the 1980s, the dot-com mania of the 1990s, and the housing crash of 2008. Each time, the solution was the same: more credit, more liquidity, more dollars. The Federal Reserve would step in, lower interest rates, and flood the system with money. The immediate crisis would pass, but the long-term debt would grow. By the 21st century, the pattern was unmistakable. Crisis leads to stimulus, stimulus leads to more debt, and more debt leads to the next crisis. The global financial system had become addicted to the very medicine that kept it alive. And through it all, the dollar remained the central pillar, the currency everyone turned to in times of fear, even when the fear was caused by the system itself. This brings us to a paradox. The dollar's strength comes from the very debt that should make it weak. The world trusts US treasuries because they are deep, liquid, and backed by a powerful government. But those treasuries are also the manifestation of America's borrowing, the IOUs that finance its deficits. The system is circular. Global demand for dollars allows the US to issue more debt, and the issuance of more debt feeds the world's demand for dollars. Today, that circle has expanded to staggering proportions. US national debt has reached levels once thought unimaginable, and yet investors continue to buy American bonds. Meanwhile, around the world, trillions of dollars are borrowed, traded, and stored outside the United States, in a vast, invisible dollar ecosystem. Corporations in Asia, governments in Africa, and banks in Europe all depend on access to US currency. The dollar has become a global lifeline and a potential choke point. But cracks are forming again. Some countries are diversifying their reserves, trading more in other currencies, and exploring digital alternatives. The share of the dollar in global reserves, once over 70%, has been slowly declining. Political divisions in Washington, rising inflation, and growing debt have all raised questions. What happens if trust in the dollar erodes? If the world begins to doubt that the United States can manage its debts responsibly? History offers a warning. Every monetary system, whether based on gold, silver, or paper, eventually reaches a breaking point when its promises outgrow its foundation. The gold standard collapsed under the weight of war and deficits. Bretton Woods fell when the US overissued dollars. And today's fiat system faces its own test, the balance between infinite credit and finite confidence. The lesson is not that collapse is inevitable, but that stability always has a price. The secret life of the dollar, then, is a story of transformation, from metal to paper, from paper to promise, and from promise to global faith. It's the story of how debt, once seen as weakness, became the architecture of modern money. The dollar doesn't just represent value, it creates it through belief and obligation. That belief remains strong, but it is not unshakable.
Three truths emerge from this story. First, the dollar's power is immense, but not eternal. It endures because the world still believes in the United States, in its economy, its institutions, and its willingness to honor its debts. Second, the global financial system is both stable and fragile at once. Stable because it has a center, fragile because that center is built on credit. Third, every era of money ends not with an explosion, but with a gradual shift in trust. Today, we may be living through such a shift. Nations are experimenting with new payment systems, alternative reserves, and digital currencies. None of these will dethrone the dollar overnight, but they hint at a future where global finance becomes multipolar. In that world, the dollar will still matter, but it may no longer rule. For ordinary people, this story is not abstract. Inflation, interest rates, recessions, they are all echoes of the dollar's hidden mechanics. When governments borrow more, when the Fed prints more, when debt mounts higher, the consequences ripple into everyday life: housing prices, wages, savings, and opportunity. The dollar's secret life affects your life more than you might imagine. The warning then is simple. The dollar system works until it doesn't. It relies on confidence, and confidence can fade quietly, then suddenly. The next breaking point may not come from a war or a gold crisis, but something far more ordinary: unsustainable debt, political paralysis, or a global loss of trust. If the foundation of belief cracks, everything built upon it trembles. So the question is not whether the dollar will survive, it almost certainly will, but in what form? Will it remain the unchallenged reserve of the world, or evolve into one currency among many in a fragmented financial landscape? Only time will tell. But one thing is clear: money, at its core, is not metal or paper, it is a mirror of collective faith. And as long as people believe in the dollar, the system endures. The day that faith fades, the world will have to rebuild its money once again. From debt, or perhaps from something entirely new.